afternoon, members. I have a privilege of inviting CA Shyam Ramadhyani sir. Can I request Pramod or Hegde, Secretary, to escort CA Shyam Ramadhyani sir onto the dais and then welcome him with a flower. Okay. CA Shyam Ramadhyani sir needs no introduction, but as a formality I would like to. He is a physics honours graduate from St. Joseph's College of Arts and Science, a fellow member of Institute of Chartered Accountants of India, and an associate member of Institute of Cost and Works Accountants of India. He has had a brilliant academic record with ranks in both CA Intermediate and CA Final Year. Presently, he is the senior partner of BK Ramadhyani and Co. LLP, a firm of chartered accountants with over 75 years of professional standing. Has handled audits of several large listed and unlisted companies, banks and insurance companies, and has rendered consultancy services in the areas of taxation, including cross-border transactions, inbound and outbound foreign investment, preparation of operating manuals, design of management information systems, structuring of mergers, amalgamations and acquisitions, family conciliation, etc. Sir is also a co-opted member of the Export Advisory Committee, co-opted member of Auditing Practices Committee, co-opted member of Accounting Standards Board, co-opted member of Corporate Laws and Corporate Affairs Committee of the Institute of Chartered Accountants of India. Sir has presented several papers in regional and national seminars as well as authored articles in the Institute's journal. Has passed the certification course on ICAI on International Financial Reporting Standards. With this brief introduction, I present before you CA Shyam Ramadhyani sir. Over to you, sir.
Good afternoon, friends. By the time the laptop is set up, just let me say a few introductory words. At the outset, I'd like to thank Bangalore branch as well as Kota Srinivas for having requested me to be here and to share a few thoughts with all of you. The topic given to me is fairly dry and looks and can look very theoretical. I'll try my best to add a few practical insights into it to make it a little more interesting. And I would like all of you to please participate and interact with me, along with me, and share your experiences and what you have done to improve quality to your firm. What have you done in the area of SQC, because that's a topic that's been given to me. Though it's a big term, it's essentially how do you manage quality control in your office, what are the steps that you have taken. If any of you have any interesting things to talk about, we could do that, otherwise the topic can become very dry, look very theoretical. We have a SQC1, standards on quality control. We have an implementation guideline issued with the Institute. These are the two primary materials which go into this quality control. This is of course to be read with the Chartered Accountants Act, the Code of Ethics. We have a Part 1, Part 2, Part 3. And we have now this new NOCLA, non-compliance with laws and regulations which are applicable from 1st of October 2022. And this is also applicable to professionals in industry, not just the practicing professionals, but it's also applicable to professionals in industry as well as key management staff of your clients. So in fact, whenever you're interacting with the audit committee of some reasonably large clients in future going forward, I think you need to educate them about this new provisions about NOCLA. NOCLAR is an abbreviation for non-compliance with applicable laws and regulations. Okay, where in some cases they even expect you to report to the regulator, stating that there is non-compliance with these laws if it satisfies certain full conditions. Anyway, that's not the primary purpose of my paper today. I'm not going to really cover that. But these are all really relevant. And tomorrow we have, from 1st of April, we have the audit quality maturity model coming in. Again, all these have to play along with each other. We can't look at just the SQC alone. We'll have to demonstrate this capability maturity model. I think many of you I'm sure all of you would be interested in some of these things, not only for your, not only for any peer reviews that you might carry out of somebody else's work, but also for your own office. System atla. Since I'm running late, how much time do I have? Huh? Okay, finish by 1:30. Yeah, I mean the usual disclaimer. These are my views and not necessarily the views of the council or any committees thereof. Yeah, we have heard enough about the importance of quality control. I mean, audit is a serious business, is what the president has been saying. Everybody today seems to have generally made up their minds that auditors don't do anything, and that they are wasting their time. They're only interested in money and for any other things, and that we have become co-conspirators with our clients in whatever ill that plagues them. I think as a collective body we need to ensure that yes, we remove this perception, because I think a large number of us do our work honestly. There may be some bad elements which is there in every profession, we are not immune to it, but nevertheless I do believe that most of us do our work honestly. Maybe some of our papers might be a little deficient, but nevertheless we do our work honestly, sincerely. We don't participate in creating GST invoices, we don't participate in fudging our books records. We don't do all these things, but some of the public perception seems to be is that we indulge in all kinds of nefarious things. We need to collectively remove this bad image that the profession has got because of a couple of things that have happened. And I've seen that even many of these NAFRA comments on various audits, let's say even ILFS and Jayaprakash Industries, you have seen, okay, they haven't complied with this standard, that standard. We have seen several comments like this, but I've not really seen what has gone wrong and what is it that they failed to detect. If you go on to the NAFRA website and look at, let's say, the celebrated case of failure of ILFS, you see many harsh comments passed by NAFRA about saying this standard is not observed, that standard is not observed. But then, okay, what happened because of this? What are the things which they ought to have found out which they did not find out? It is sadly lacking. It looks like they just want to find some reason to hang you, rather than trying to go to the spirit of all these standards to say that yes, because of what you didn't do properly, these are the things which went wrong in this company, these are the malpractices which took place in the company and you did not report upon that. They're more trying to say things like, you didn't, your papers don't show this, your papers don't show that. You have a conflict of interest. Maybe they had some conflicts of interest, I'm not saying anything about it, but then the AQR reports of NAFRA don't really throw up what has gone wrong. And just to write, I don't know, but they write a fact report containing all kinds of deviations from SQC as well as the auditing standards, more than the accounting standards. They seem to point out deficiencies in the auditing standards. They pick out some sentence in the auditing standards, reproduce that and say there's no evidence for this. I think it's time that our regulators understood that audit is an art and not a science, where every item you cannot prove with some mathematical equation or with some piece of paper. You cannot prove every statement which is there in some auditing standard. But unfortunately, the climate in the country is where they pass all kinds of judgments of people saying that you haven't done anything because some papers were not found in the file, and without pointing out what went wrong because you didn't do all this. Okay, there's a background to this quality control. Obviously, it is to provide reasonable assurance that the firm and its personnel comply with professional standards and regulatory and legal requirements, and the reports issued with them are appropriate in the circumstances. So I find that even if the report is appropriate in the circumstances, because they are not pointed out anything, they are only worried about this paper not being there, that paper not being there, this standard not being complied with. Unfortunately, that seems to be the approach of NAFRA today. At least a few reports and the few AQR reports which we have seen. Okay, there are some lot of definitions here, but there's one definition which is fairly important, which probably many of us are not used to. This is the fourth one, the third and the fourth one: engagement quality control review and engagement quality control reviewer. So at least for listed companies, the institute guidelines expect that in addition to the engagement partner, the audit files, documentations, the conclusions drawn, the assumptions that have been made are independently reviewed by one more partner or by another firm outside even the practice unit. Somebody else has reviewed all the appropriateness of the way decisions have been taken. And in fact, if you look at the NAFRA 2 application which you file with NAFRA for all listed companies annually, there is straight away a column asking you who's your quality control reviewer. So it's extremely important that at least for listed companies and there's a quality control reviewer who reviews in addition to the engagement partner all the critical judgments made, the critical estimates made, disclosures made in the balance sheet, compliance and technical and professional standards. That all these are reviewed by a person independent of it is like a peer review within the firm itself. At least of all listed clients. This is not something which has been done regularly, and in fact in the case of, if I'm not mistaken, Jayaprakash Industries said that there's no quality control reviewer, and so it's a blatant and flagrant, they've used the word blatant and flagrant review of, deviation from the auditing standards. They pick up your audit report saying that we have complied with the auditing standards. Your audit report says that invariably, or you have to say that. And then they say, how have you complied with the auditing standards if you don't have a quality control reviewer? So at least for listed entities, wherever any of you do your own listed entity audits, it is important for you to see whether there is have somebody else as a quality control reviewer in addition to you. And even if you are a proprietor, it is open for you to ask some other CA to review your files and working papers and act as the reviewer. The institute rules permit that. It need not be one of your employees. Of course, you have to ensure how other kind of conflicts don't arise in the situation. And two, wherever you are doing the audit of, you are doing the peer review of any practicing unit which is doing the audit of listed entities, this is something which you should specifically focus at. Has there been an engagement quality control reviewer separately? And has his name been put up in the NAFRA portal? Because by 30th November you have to file that form 2. Every practice unit has to put up the list of all listed entities that you are auditing, and there they ask you who is the engagement partner or who is the QC reviewer within your firm. So this is something which is important, which is not, many of us in smaller companies are not very familiar with this kind of thing, or we don't have the resources to have one more reviewer, but this is something which you should please keep in mind when you're doing audit of listed companies, or you're reviewing files of See here, the last item, suitably qualified external person. This need not be your own partner or own employee. It could be even a partner or an employee of another firm. You could engage them to do your quality control review. Many of these are quite theoretical. There are the elements of a system of quality control. There's leadership responsibilities for quality within the firm, ethical requirements, acceptance and continuance of client relationships, human resources, engagement, performance, monitoring. Some of these have already been covered by my earlier speaker, so we can go. Many of it is merely trying to codify what we already really do in practice. So I don't think we need to go through many of them in too much of detail. But if there is something which merits importance, I'll talk about. The first one is, of course, the first element is the leadership responsibilities for quality within the firm. This is like the tone at the top, where the managing partner of the firm needs to take specific responsibility for quality within the firm, and he has to promote a culture whereby you impress upon all your partners and your employees that quality is something which is very important, and that commercial considerations will not overweigh the need for quality in our audits. This is something which the CEO of the company, the managing partner or the principal partner, he has to promote this culture and keep reinforcing this time and again amongst his employees and partners. It's not only the employees, but including his partners also. And usually he's also responsible for identifying who will do this quality control. He has to identify that at the beginning of the audit, and it should normally be nominated by him and not by the engagement partner himself. The engagement partner should not say, okay, I'll take Shyam because I know he's not going to find so many mistakes, is what I'm going to do. So it's the managing partner's principal responsibility to identify who will be the engagement, who will be the quality control partner for every single assignment where you think it is one listed entity is compulsory. And there are other assignments also where you might think that even though it's not listed, you might think it is good to have a quality control reviewer in addition to the primary principal engagement partner. So he has to decide this part. Yeah, these are some of the responsibilities of the managing partner: design, implementation, and ensure operating effectiveness of quality control. Ensure that there's continuing educational program. He has to continuously evaluate client relationships to ensure that yes, these clients are not becoming extremely difficult. Many times, ultimately, we have to place a lot of dependence on the integrity of the client. It is not that every single item that we can find out ourselves. So if you have very risky clients, where you know that they are not concerned about things, that they indulge in a lot of either manipulating the financial statements or diverting money, then you really need to seriously evaluate whether you would like to continue with them. It's not that we can find out every single thing within the constraints of a normal statutory audit. So this evaluating continuously client relationships and specific engagements to ensure that not only did you when you accept it at the first time, but also on a continuing basis, you need to ensure that these are clients that you would like to have. And there are certain sectors which are highly risky. For example, it could be the real estate sector, it could be somebody who's in the diamond business. There are some sectors which are naturally more risky than the other sectors. And in these cases, the managing partner has to be more careful to ensure that yes, it is fine to have this kind of clients. And coming on to element 2, which is ethical requirements, we have spoken quite a bit about it: integrity, objectivity, professional competence, confidentiality, professional behavior. And as far as ethical requirements are concerned, you have to guard yourself against these kind of threats. A self-interest threat, a self-review threat. A self-review threat is the same thing where you're supposed to have an independent partner to review what you have done, at least for listed entities. Advocacy threat, familiarity threat, and intimidation threat. These are the kind of threats which the SQC talks about, and they have explained what these threats are. And how do you try to mitigate these kind of threats is also given in this SQC. And this familiarity threat, where you deal with the same client year after year, and because of this, your audit independence goes down. And generally, again, for listed entities, they expect that you will rotate the audit partner after 7 years, so that one partner does not continuously do the audit of a listed enterprise. So So the standards generally talk about a maximum period of 7 years. You could even rotate earlier, but then within the firm itself, the person who's going to handle these audits should rotate, and including not only the audit partner but also the audit team which does this audit. It is good to rotate them at least once in 3-4 years, and in any case not later than 7 years as far as the audit partner is concerned, as far as listed entities are concerned. And if there are any independence issues, it's best to talk with the audit committee chairman. If you think there are some kind of, and many enlightened companies, the audit committee chairman wants a private meeting with the auditors where the company management is not there. So the audit committee, in many companies I've seen the audit committee saying that yes, we want to speak to the auditors alone, we don't want anybody from the management to be present in this meeting. And in fact recently in a bank, the audit committee chairman came alone to my office. He said, I'll come to your office, I don't want you to come to my office, or I don't want you to come to the bank, I will come to your office. So please tell me what is happening in the bank. Do you find, are you uncomfortable with anything? Are you given access to all documents? Do you feel that the culture from the company, from the top is okay? Do you find anybody being cagey, evasive, not giving you adequate data? The audit committee chairman came to my office and he spoke to us for about 2 hours alone. There was nobody else in the bank. I don't think even anybody from the bank also knew about it. And I think he was just doing this routinely. It is not that he was suspecting that anybody was were doing these things. These are wherever today, because there's a lot of responsibility even on the audit committee chairman. So many of these people are taking that extra precaution of talking to the auditors privately. Yeah, as far as ethical requirements are concerned, we have spoken sufficiently about it. We need, so these are there. Yeah, as far as ethical requirements are concerned, today we have all got so many staff. We don't know what is the kind of relationship they have with the client and which might impair their independence. I think it's good to take a declaration from our employees at the start of every audit stating that they have no kind of relationship which can put them into a compromising position as far as the audit is concerned. In fact, the institute formats require you to take an independence declaration. They don't hold shares in this, they're not carrying on business with anybody inside that auditee client. None of them are, whether you have any relatives in that company. It is good to take a declaration from your staff to say that yes, they don't have, because tomorrow if he compromises independence, you will be hauled up. The person who's going to suffer is not the employee, but it's going to be the engagement partner and the practice unit which are going to get into trouble. So it is a good practice, I think, to ensure that you take a formal written declaration of independence. And second is, watch out for any aberrant behavior during the audit, where the person tends to side the management, side the company, talk for them most of the time. Identify any kind of aberrant behavior. And in fact, today even in some large companies, they take declarations from their employees that they have no connections with their vendors, service providers, particularly for people in purchase department, commercial departments. Yes, sir.
You spoke of independence being watched out because I have employees and they may hold shares. Now, taking declaration, is it sufficient in today's times? Because that can only be a first step in the process. I think monitoring wise, if one needs to really ensure this is happening, I don't think we can just not have a monitoring mechanism. You may need them to declare when and what investments they are making, how, on what engagements related to, whether they are holding shares, whether there is a direct conflict of interest. I think just taking declarations may not suffice.
I agree, taking mere declarations is not enough. I also mentioned looking for, sometimes it's quite, to start going through the registered members of this company to see whether his relatives, his family people all have shares in that company. These are all, and a large setup has got where you've got several people in a team. It's quite difficult to manage. The first step is to at least get an independence declaration. Certainly you have to watch out for any aberrant behavior at a very minimum. And see whether anybody is showing any kind of inclination or tilt always in favor of the company, trying to talk for them, definitely. And if any doubt comes, of course, it has to get completely investigated. Whether they hold shares there, whether they have any business relationship with any employee, they have they are related to anybody. Any of these kind of stuff, one has to be very careful. And in our Indian culture, the word relative can go quite far. It is not just the direct family, but the relative can go quite far, and many times it influence our behavior. Yeah, and some of these also talk about taking advice from other from a specialist in this field. If you do not have adequate expertise in a certain matter, they also, at least it looks like they permit you to take advice from somebody else. But then you might need a written opinion. And two, of course, generally for accounting and auditing matters, they generally, the institute also frowns upon just depending upon somebody else's opinion. You are supposed to apply independently and only use the other person's opinion as a validation. And actually, in one of our audits, one of our large audits, we did take written opinions from third parties wherever substantial sums were involved, some very material issues involved, which could have far-reaching ramifications if an opposite view was taken. We have taken written opinions from people whom we believe are experts in this particular field. So if you do come across a situation where some matters has got far-reaching importance, and even if you apply your mind properly, but if you feel that any wrong decision here can have an adverse view on the entire financial statements or your report, it might be a good idea to take a second opinion from somebody else and get a confirmation. But of course, you have to find the right person who can give you an unbiased opinion, and if that person gives you a contrary opinion, you have to be ready to deal with it. And I think it's also important to keep track of all the public news which comes about our auditing companies. Whatever is there in the press, whatever is there in the media, whatever is there in the social media about any company, it will be good to if somebody can within your office can track what kind of reports are coming about your client, particularly again listed entities where there's a lot of attrition of people are leaving the company left, right, and center. It might indicate a larger malaise. Of course, this talks about that you have considered the integrity of the client and you do not have information to conclude that the client lacks integrity. This is a continuous evaluation. This is not a one-time. Evaluation. You have to do this continuously. And today we have also issues from the point of taxation, where you know that if the client has got large amount of concealed income, has got a parallel set of books, you're always or manipulates GST invoices, fake invoices. You're always exposed to problems with these kind of clients. So you really need to seriously evaluate whether you would like to continue with them or even give up. This word TCWG is those charged with governance. This is a terminology which is used frequently in the auditing standards that you communicate with not only the key management but also those charged with governance. They would, outside the key management person, they would generally be the board or the audit committee with whom you have to interact and keep them do this. Two, if the client acts is very aggressive, they take very aggressive positions on any matter, or they act very aggressive and become very hostile if you take a contrary view. You have to be very careful about these kind of situations, because they probably have some kind of attitude, some kind of problem. They want to hide something from you, so they become unduly aggressive, or when you raise some matter. I enclose a few annexures which would be useful for you in evaluating things. There is an annual firm personal independence confirmation. where you try, the managing partner has to continuously evaluate whether the firm is in a position to, is really independent, whether anybody's got conflicts of interest, whether we have the capability and the resources to execute this assignment well within the time limit. Do we see any conflicts of interest? Do we need to consult any outsiders in this assignment? This is something with the managing partner as well as the engagement partner need to continuously evaluate. There's a format given in the standards, and you would do well to use them. Yeah, the same thing is about acceptance and continuation of client relationships. You need to evaluate this continuously. It's not a one-time, it's not just a one-time effort. Particularly since today most, or even an audit subject to rotation, you can generally do it for 10 years. So you need to continuously evaluate to make sure that yes, this client you would like to retain, and then so that it does not become too very risky, particularly listed entities. And recently I've heard of even one case where the tax department has complained to NAFRA about something said in the tax audit report, even though it's not a listed entity. I don't know whether the NAFRA has any jurisdiction over non-listed entities, but the assessing officer reported a certain matter against the tax auditor to NAFRA, and NAFRA sent a notice to this particular tax audit to this tax auditor. It's a small company. It's nothing very big. So these kind of things today, everybody knows that the best way to frighten the auditor is to refer the matter to some regulator. It could be the institute, it could be NAFRA, and today NAFRA is the latest weapon which even regulators have against you. It could be, the reference could come from a bank, it could come from an income tax officer, it could come from a GST officer, it could come from somebody in the enforcement directorate, PF commissioner. It could come from any one of these people, and then today more and more regulators are resorting to even complaining against the auditor again with somebody whom they think which will take action against it. And many of these are also used to settle personal scores. And this case, which was referred by an assessing officer against a tax auditor, related to the deduction of the section 80 JJAA. On that one section where something has been certified, and the officer felt that this was a staffing company, and in the staffing company they were continuously providing their client companies with bodies. And this tax officer got a brilliant view saying that he does not satisfy 80 JJAA because he is not enjoying the benefits of his employee services directly in his work. So here, one of the things on one of the grounds on which he has done this is just this company is purely a pass-through. You just pick somebody else, hand it out to another client, and then you get some 10% above his fee, above his salaries or whatever it is. So you're more like a pass-through. So this guy has gone and this tax officer has gone and reported the matter to NAFRA. And NAFRA is saying, now show me all your quantity control procedures, blah blah, in your tax audit. Show me your working papers. Have you done this? Have you done that? Times are really bad. We've had a lot of cases where about 2 years ago we had a lot of people, a lot of auditors exiting from their job, exiting from the company, and then but in the year 17-18 we had 36 audit firms resign. Most of this relates to listed entities. They don't relate to unlisted entities. And in April to March 2018, we had 32 people, 32 firms resigning as auditors in the midst of the work. Okay? And of course, I don't have information on 19 and 20 and 21. We don't have that information as yet. But we found that there was a sudden spike about 2-3 years ago where auditors resigned because they felt that it's no longer, it is going to be very risky to continue as auditors of some companies. These were some of the things which happened. The Anil Ambani led Reliance Capital, Reliance Home Finance, the auditors resigned from there, stating that we don't have unsatisfactory response to certain observations. We had auditors resigning at Vakrangi Limited, Manpasan Beverages, Bhushan Steel, Kovai Medical Center and Hospital, Precall, LGB Forge. In all these companies, the auditors resigned before they could, in the midst of their work, and in some cases they've even resigned 1 or 2 days before the results had to be announced, because they probably faced unbearable pressure from the company. And because of this, SEBI came up with a circular stating that stating that you cannot resign indiscriminately. You have to only resign only provided you fulfill certain conditions. So they have bifurcated this into 3 or 4 categories. You have resigned within 45 days from the end of the quarter. Even in that case, you have to issue a limited review for that quarter. You cannot resign without it. So if today your December 31st is your next quarter and you resign on 15th of January, you have to complete your limited review for the December quarter and say whatever you want in that report, and without it you just cannot say, okay, I can't do this job and resign. Second, you resign more than 45 days from the end of the quarter. Then you have to do that quarter's limited review and the next quarter's limited review also compulsorily. You cannot resign. And the third situation is you have done the first 3 quarters and then you want to resign. They say, no, we won't let you resign. You do the 4th quarter and as well as the annual audit. Only then you resign. So SEBI does not want you to take even I think the institute has also issued a detailed guidance note on this. So the regulator does not want the auditors just to take the easy path out and resign at the last moment and throwing the investors and the stock markets in a dizzy. So if anybody is resigning as an auditor of a listed entity, one has to be very mindful about the SEBI guidelines because they prohibit you from resigning. Actually, recently we had a case where they wanted us to be auditors of a company where their auditors had been barred by RBI from conducting assignments, let us say from March 22-23. Then they realized that this company had already done 3 quarters limited review. So they said, sorry, we can't change them now, we'll look at it later. Because they have already done 3 quarters review, so we have to go through them for 21-22. Only in 22-23 they have been barred. And so we will think of asking them to resign afterwards. So let them continue to do even the March audit for March 22 because of this guideline from SEBI. Yeah. If there are any concerns that hampers the audit, you are expected to approach the audit committee chairman, who shall receive such concern directly and immediately and without waiting for the quarterly meetings. The audit committee has to take immediate action. He cannot wait till the quarterly meetings and he has to address the auditor's concerns. If a resignation is proposed, all concerned along with relevant documents should be brought to the notice of the audit committee as to why the auditor is resigning. And we also have to file this form with the ROC. There you cannot say that it's you are resigning because of technical reasons, administrative reasons, I don't have staff. You can't give such reasons. You're expected to tell the ROC as well as the audit committee as to why you're resigning. Because they don't want you to take the easy path out and then resign when you're faced with some at the last moment. And upon receipt the audit committee, the board of directors shall deliberate in the matter and communicate its views to management and the auditor. This is all there in that SEBI circular, and they're also saying that the client must incorporate these provisions in the appointment letter itself as far as listed entities are concerned. And the practicing company secretary shall also certify compliance with these provisions wherever the auditor wants to resign. Yeah, this is what I spoke to you earlier. There's a NAFRA 2 form that we need to file every year before 30th November as to what are the audits of listed entities, banks, insurance companies, electricity supply companies, which we have done, which the auditor has carried out, even though they're unlisted. He has to give a list to NAFRA, and this contains who's for every audit, who is the quality control reviewer. It asks you who's the engagement partner and who's the quality control reviewer. You have to mention who this is. Yeah, human resources are my illustrious earlier speaker has spoken enough about human resources. Today this forms a very important place even in the AQ, in the audit quality maturity model. The importance on quality control. Unfortunately, we are in a situation where getting resources today for the profession is extremely difficult. And then getting people itself is very tough, and now getting people to the quality that is desired is becoming extremely painful for the profession. It's a huge challenge that we are facing, as much as the expectations of the regulator. There's a whole lot of things in the SQC regarding all this. I think I'm running out of time. I need to finish. This is what the engagement quality control review. I've spoken about this already. Is extremely important. And then what is the criteria for eligibility of the engagement quality control reviewer within the firm? Then how should the engagement performance be? How should this get monitored? There are several forms prescribed in this manual, but I would think that at least one or two of them are extremely important. One is the annual your planning document, your engagement planning document. So I think this is one document which even if you don't have all of them, I think a small planning document specifying what are the risks that you've identified in this audit. How do you want to respond to these risks? Who are the members of the engagement team? What is your materiality levels which you want to judge on? Are you going to use the work of any experts? What are the issues that you think that you're likely to face? And what are the key audit steps that you propose to make? These are something which you need to keep in mind, and I urge all of you to start implementing this, unless of course you've already done it in your firm. This is for an illustrative engagement planning memorandum. It is there in these institutes, various things. There's also one. This is a summary memorandum which you fill up at the end of the audit. One is at the beginning of the audit. The second one is a summary review memorandum which you fill at the end of the audit, where you talk about whether you have done all the things that you agreed to do that you felt was necessary at the beginning of the audit. You have to whether you have done all these things, and then have you changed your materiality levels? Have you increased your sample size? Decreased your sample size? Have you engaged any experts? What are the main issues you found during the audit? What was your response to it? All these things have to be dealt with in this engagement summary memorandum which you prepare at the end of the audit. In fact, one of our clients, their accounts gets consolidated in their holding company outside the country, and the Indian company is a material subsidiary. So the consolidating auditor actively reviews, with the consent of the client, they review our working papers. And one of the documents in which they place a lot of importance is this planning memorandum, as well as a summary memorandum which we prepare at the end of the audit to ensure that yes, all audit issues get documented. So I would urge all of you to, if you ask me of all the documents which are there in all these standards, some of the most important thing would be to document how do you plan to do your audit, and two, whether you have done everything as per your plan, whether you have changed something critical, your sample size, your have you changed it, have you changed your materiality levels, have you taken any expert views, what are the new issues which came up during the audit. So these are two important documents. If you have this, some of the other smaller things you can always explain, keep it ready and stuff like that. I mean, as long as you have done your work properly, the other things can be handled. Yeah, this is the audit monitoring throughout the course of the audit, and you have to get this quality controller to complete his job before you sign off the audit report. It can't be done afterwards. It has to be done prior to your signing off the audit report. So this is quite, and you have to factor in sufficient time for that. Yeah, we have this new AQM, which is going to be applicable from April 1st. People have spoken about it. I'm not going to go into too many details, because even we are also in the process of understanding its requirements and start at least taking first steps to implement some of these things. It might need an audit manual, it needs checklists in support of various things. Personal policies to be documented. It requires all this, and tomorrow they've only mentioned saying that the peer reviewer also has to review all this audit quality maturity model. What is it that you want to rate it? Initially it's going to be voluntary, and I'm sure in course of time we'll have also some review on this by either by the peer reviewer or by somebody else. Yeah, there are some extracts are made from some of the AQR reports on NAFRA. In the case of Jayaprakash Industries, they say that NAFRA observed that the review report was signed by the engagement partner in his capacity as an engagement quality control reviewer. There is no documentation of any EQC review done by an EQCR or minutes of discussions and concluded between the engagement partner and the engagement quality control reviewer. In the absence of such documentation, NAFRA concluded that the firm completely failed to comply with the requirements of SAS regarding EQC review. There was no EQC review that took place at all. The engagement partner himself acted as the EQCR, which is gross and total violation of SQC1, which I already mentioned to you. The second one, in the case of ILFS, it says NAFRA held that in the SQC policy the firm, no details are provided about the actions to be taken by the audit firm to mitigate and eliminate the familiarity and self-interest threats. Declarations of eligibility submitted by the audit firm were false, invalid, and with full knowledge of such illegality. Even the audit firm's compliance with the fundamental principles of the Code of Ethics was threatened by familiarity and self-interest threat. These are all there, and if you just go to the website and ask for the audit quality report of NAFRA, in the case of ILFS will be the first one which comes up. And of course, the first thing that they have documented is all the other fees they have received from the client. Obviously ILFS is done by the Big Four. I don't want to get into names, but so they have gone into all the fees that the other affiliates of this Big Four has been the kind of fees they have received from NAFRA and from ILFS, and they have concluded that this is purely a case of breach of self-interest threat. That's it. I think I've run out of time. My presentation will be available to all of you. You could please take it. But if you have any questions, if any of you have any questions, or if any of you want to share something about your own practice which you think is going to help others, I would welcome that. You could do that for the next 5 minutes, and then I'll hand over the matter back to the organizers to take matters forward. It will be nice if some of you can share what you have done, if you have done something interesting, or if you have used technology to, somebody is talking very much about technology in the earlier session. If anybody has done and used technology better to identify some of these things, it will be very nice to hear them.
Nowadays, the common problem for a medium firm or small firm is the manpower leaving at the idle time. Despite your work, they spend time in employed for 10 months, last 2-3 months they are working.
Absolutely. Staff is becoming a huge.
All our planning of time and management goes.
Yeah, absolutely. I mean, if you ask me, that is the single. It's probably the single biggest problem in the profession today, apart from one, over expectation from the regulator, to the staff position, and 3, sorry to say this, the fees that we receive. Yes, sir.
I think we have reached a time where there is overzeal in the way the regulators are approaching, and this is going to lead to increased litigation. Those with the practitioners, they will have to have a legal support, and I think this is where small-time practitioners will be found to be, found wanting, because they will not have the resources. I think it is time we work in a consultative manner where the institute comes up with a support framework, provided there is sufficient, safeguards. If there is an evidence, prima facie evidence of overzeal on the part of regulator, we need the institute to support us. I mean, you look at any other profession, you look at physicians, doctors, lawyers, if they are challenged, the institute will rally behind. I think we need to have this situation even here.
Absolutely, I could not agree with you more in this. Absolutely, I mean, we are left to the dogs to fight your own battle. Nobody is going to come to our rescue today. Unfortunately, that is the situation. And the government, it looks like the government has a perception stating that we're all a bunch of thieves. Conspiring with our clients. That's the impression they have. They seem to have gathered. I don't know. I could be wrong. I have not met anybody directly in the government. But that's what I'm told. This has become a very. I just end the matter with one joke I've heard. There were 3-4 people who were who were talking amongst each other, and they got into a discussion about what Jat is Hanuman. Okay, one chap said Hanuman he's a Hindu, he's a Rama Bhakt, so he's the God's greatest devotee ever, and so he has to be a Hindu, he cannot be anything else. The Muslim said that sorry, he's not a Hindu, he's a Muslim. Hanuman, Suleiman, Rahman. So he's got this kind of a name, so he's actually a Muslim. Then there was a third person, probably a chartered accountant, who said no, chartered accountant. Hanuman is a chartered accountant because who's going to burn his tail for somebody else's wife? Knowing fully well that you might get burnt, who's going to burn his tail for somebody else's to safeguard somebody else's wife or to find her and jump across the ocean and risk your life? Only a CA is going to do all this to save somebody else's backside. Unfortunately, our life has become like that nowadays, and particularly people like me who are old and who are probably entrenched fully in the profession. We don't have alternatives at this time of your life. Anyway, I hope things will change. I'm not pessimistic about this. Things will change, but when it's going to take place, how it's in what shape it's going to take place is extremely difficult to find out. All that we can do collectively as a profession right now is till we see some light, we all do our job sincerely and hope for things to be the better. I mean, things will work out fine. Thank you very much. Too much of,
That was an excellent session by CA Shyam Ramadhyani, sir. Let's give a round of applause. Thank you so much, sir. Can I request CA Pramod R. Hegde, Secretary, to hand over a memento to the speaker as a token of gratitude and respect.
thank you very much.
Now let's break for lunch and then reassemble by 2:15 p.m.